Tsogo Sun today unveiled its Sand and Sun refurbishment. Earlier, Tumisho Grater asked CEO Marcel von Aulock for his views on dealing with limited resources like water and electricity. Let's take a look.
A theme in our business for quite a few years that the administered cost has increased dramatically, both in terms of direct administered costs from government, so your rates bill going up, your price of electricity going up, but also because of the lack of availability of these things. So we've spent hundreds of millions on generator capacity. All our properties are fully under generator. We can be self-sufficient on power. That obviously pushes up your cost because diesel's more expensive to run on than Eskom power. But we have to have that ability. You can't have a skyscraper hotel, you can't operate the lifts. All our casino properties are under our own power supply if we need to be. We've put a lot of money into water storage capacity, so we can run for 3 or 4 days if the municipal water system goes off. We cannot produce water, so we can't be the completely self-sufficient in that, but we can manage the shocks in between. In areas like Malahleni in Witbank in Mpumalanga, the water infrastructure is in crisis. And we had to put down boreholes and so on to become self-sufficient by and large, simply because the water infrastructure of the municipality was so decayed. So it is a difficult environment, and it used to be something that was unique to our African portfolio. You know, when we built hotels in Mozambique and in Nigeria and so on, you built completely and utterly self-reliant, and if you got government-supplied electricity, that was a bonus. It wasn't a feature in our South African hotels, and we're slowly putting that infrastructure in here because of the shortage of those resources from the state.
3-4 days is what you'll be able to function on if there's restrictions.
Switch off, yeah. But we can't go off the grid. You know, it's the same as electricity. You can run on generators for a while, but ultimately you run on diesel. You need the state system to work, but you build in buffers that short-term problems can be solved. And quite frankly, if a city like Johannesburg or something ran out of water for 4 days, that crisis will be far more traumatic than simply the hotels not having water. It will be the least of everyone's problems. But it's stuff that we've had to cater for.
In terms of your numbers, I mean, there's something that we as the general public may be happy about. Government spending's gone down. Not necessarily good news for you there, though.
No, exactly. I'm torn. You know, as a taxpayer, I'm delighted that government's exercising some austerity on some of their spend. As a hotelier, I'm not that happy they decided to save in hotel trade, of all things. We said in our last year-end results that came out, in the year to March 15, we lost about 100,000 government room nights out of a total of about 300,000. And that is an austerity measure they've just pulled back. You know, it's cyclical like corporates. And as a taxpayer, it's the right thing. I mean, they need that austerity in there. It has recovered a little bit, but not dramatically so. It was particularly bad last year because of the elections effect. So you get a seizure of government during that. So I think that effect's shown a bit of growth in this year because you don't have a repeat of the elections. But government is focusing on that. And I mean, the Minister of Finance announced that in Parliament, an area he wants to control. So it's something we must just deal with. It's just part of the bigger story that we're in a low demand or below normal demand environment.
There seems to be some reprieve, though, for the tourism or the hotel industry with these visa regulations that have been relooked. What is your outlook for the festive season coming up? So,
look, the visa debacle is not solved quick enough for this season. This season, from an international tourism, whatever impact was going to have is going to happen. There's going to be no change on that. What we're hoping is, because it's now being addressed, is that by next season that will recover. All that said, our season is actually looking quite good this year, but it's very local driven. So we've got strong demand in Durban. Our peak weeks are already basically full. We had our summer sale came out last week. I think it was launched. Very strong demand. The sales revenue on the sale was about 20% up on last year. So we think we're going to have a good season. What we don't know is what the impact will be in markets like Cape Town that relied very much on that international tour business coming through that would have been lost. Now, we weren't a huge player in that market because we're far more corporate focused, but what happens is the entire town empties out, and then everybody starts fishing in everybody else's pond because they don't have their core business. So we're a little bit nervous about what happens in Cape Town over season, but your local travel is strong. And the European side it's really the family impact on the birth certificate issue, because they don't need visas anyway. So your European and your American market should be okay. It's the family side that impacts, but it's not a wholesale blockage of the market, whereas India and China was a wholesale shutdown of the market. But look, it's been addressed. We've got to wait it through.
You mentioned that the weaker currency is twofold for you. Good in one aspect and negative in some. What do you mean by that?
In our business, we've got quite a good Africa expansion business model that we're running up there. We're in 8 African countries. That's showing very strong growth this year. We had our hotel in Mozambique closed last year for renovations, so obviously there's a non-repeat factor there. But our African properties earned ultimately dollar revenue streams. Translating those at a weaker exchange rate means our rand profits go up very strongly. So that's been good for us. For South Africa as a tourist destination, both your traditional leisure as well as things like shopping from the African market and so on, a weak rand is very good. When you see the rand strengthen, that market disappears to Dubai or Singapore, and when the rand weakens, that market comes to Sandton and so on. So those are positives. On the negative side, you do a lot of imported capital equipment. Nearly all slot machines are manufactured internationally, priced in dollars. So what we gain on the income statement, we can lose on the cash flow quite quickly because we have a high capex program, and a lot of that cost just runs.
That was Tsogo Sun's Chief Executive, Marcel von Aulock.